Welcome to this video. We're going to talk about building a field labor budget. It's your first cost budget when you're building an element budget. Here in your field labor budget, you're going to put together a plan for the wages of your field staff, like foremen, laborers, equipment operators, people whose hours get built into your estimates. That's going to match up with your sales goal. So to hit a certain amount of sales, you're going to need a certain amount of labor to get there. And your budget is your plan, like an HR plan, for the people, the roles, and the cost of the wages to hit your sales goal. To make sure that A, you've got an accurate amount of people to hit that goal, and B, that you don't have too much people or too many hours to hit the goal, so that you'll be profitable at the end of the year. One of the most important things to remember is that when you're building your field labor budget, keep in mind that you're building it to hit your sales forecast, not what you did last year. So for instance, if last year you did 500,000 in sales, but this year you think you're going to do 900,000 in sales, you're probably not going to be able to hit that 900 with the same people that did 500. You're going to need to add more labor. So it's important when you're building your field labor budget to keep in mind that if you're growing your sales, you might, depending on how much you're growing, need to grow your labor staff. You might grow your sales by just getting more productive or charging a bit more money. But if you're going to grow your sales significantly, you're probably going to need more people or more hours to get there. And the same thing applies in the opposite scenario. If your sales are less than they were last year, it could very well be that you have to or could reduce labor hours to hit that lesser sales goal. One question that always comes up when building a field labor budget is the first thing you'll see at the top of your field labor screen, which is called labor burden, and it's looking for a percentage. Let's start off by understanding what labor burden is and why it's there. Labor burden is the cost of your payroll tax, workers' compensation, unemployment insurance, and any other payroll insurances or deductions, and your labor burden is going to be expressed as a percentage of total payroll. Now why? You could, and it wouldn't be any different, enter the cost of payroll tax and workers' compensation and unemployment in as a dollar figure. But when you get into changing your field labor budget, adding employees, subtracting employees, giving people a raise, changing the hours, it makes calculating these things really time consuming. Every time you made any little change, you'd have to go back and try to work out how that change would affect payroll tax and workers' comp and unemployment. It's a lot easier when you're budgeting to figure out what percentage of your total payroll these things are, and then just apply that percentage over and above whatever you're budgeting for wages. It might not be to the penny accurate, but it's going to be really close. So how do you figure out your labor burden? Well, very simply, start by adding up the total cost of your payroll tax, unemployment, workers' comp, and anything else like vacation pay or paid sick time or any other guaranteed payroll benefits employees may have. In the next step, add up the total gross wages. By gross wages, we mean just the employee wages without any of the payroll tax or insurance or burden. Then divide your labor burden costs by your gross wages to come up with a labor burden percentage. So for instance, if I had $100,000 in payroll, and I paid $20,000 out in taxes, insurances, and workers' comp, $20,000 divided by $100,000 gives me a field labor burden of 20%. Now let's also look at some key points you should remember when building your field labor budget. Number one, the average field labor burden is around 20 to 25%. Now that is an average. Your company might be different. You might calculate yours to be 15%, and it may very well be right. Or you might be 31%, and it might very well be right. It does depend on your state, your taxes, whether you work with unions, whether you have to pay vacation pay. There's a bunch of factors that may cause one company to be different than another. However, you should be in and around that range. If you worked out your payroll burden to be 4% or 45%, you've probably made a mistake somewhere. Those numbers would either be too low or too high. Just double check with your payroll person. Now, if you forget everything, but you can only remember one thing, then remember this one. In your field labor budget, you only want to include your field staff. So your field staff are your staff whose time gets estimated when you build estimates. It doesn't really matter where your staff work, whether they work in the office or whether they drive around in a truck all day or whether they're digging holes. The most important thing to remember is that someone whose time gets estimated or who gets thought of when estimating belongs in the field labor budget. If you've got an employee who may work out in the field, like a supervisor who drives around inspecting crews, but their time doesn't get estimated into jobs, then they are overhead. Overhead examples would be people like that supervisor, your accountant, your mechanic, your bookkeeper, and possibly you as the owner. There's a great chance that none of those people's time actually gets estimated into jobs, and therefore that time is overhead time, and it does not belong in your field labor budget. Your field labor budget is exclusively for employees whose time gets built into estimates. This would be like foremen, laborers, equipment operators, people who are on the job doing the work and whose hours get counted when you're building an estimate for a job. As you're working through this budget, you should just clear your mind of any overhead staff. They don't belong anywhere near this budget or this video. They'll be dealt with in a later video. And if you have staff who might straddle line in both, like I've got an operations manager who most of the time is in the shop or office, but sometimes goes out to help on a job, we may need to separate or split their time between both budgets. And we'll handle that when we take a look at building your labor budget. We'll give you an example of that as well. You may want to group roles together for speed. I'll do that when we do a sample. I will show you how to group roles together so that you're not putting in one employee at a time. Certainly makes it faster to build a budget for companies with a lot of employees. And then the last tip here, for those of you who are building a division budget, and that is those of you who are taking a portion of their company, like for instance, just their lawn maintenance division, and separating a budget specific to that division. For your field labor budget, you only want to include the hours and the wages specific to that division. So that means you'll have to go through your payroll summary and really separate out the hours that worked in each division in order to get an accurate division budget. For those of you who are doing a company budget, don't worry about that last step there. It's only for companies who are specifically trying to break their company down and build budgets unique to each division. Let's take a look now at the field labor budget screen and go through some examples. At the top of the screen, you'll see the labor burden. This is where you would have calculated your labor burden percentage. If you divided your total burden cost by your total gross payroll and found that it was 20%, then that's exactly what you're going to enter here, 20%. Don't enter 0.2, make sure you enter 20, so that this reads 20.00%, or whatever your field labor burden happens to be. The next thing you're going to want to set is your overtime multiplier. Now, 99% of you will be 1.5 or time and a half. But if you're double time or triple time or some other variable, there's some other multipliers in there you can use as well. Moving down here, you're going to notice there's two sections, one for hourly field staff and one for salaried field staff. Don't make the mistake of thinking this is field and overhead. Salary doesn't mean overhead. Salary simply means a field person, like a foreman, who's paid an annual salary instead of an hourly wage. It's probably common that most of your employees are here in the hourly field section, but many landscape companies put some foremen or even some other employees on a salary, even though they're field staff, and so this is a way to budget for them as well. Remember that overhead staff are going to come down in a later video in a later budget, and overhead staff don't belong in this budget at all. Let's take a look now at a very simple example of how to budget for one hourly field staff. Let's say I'm working on a construction foreman's wage budget. First thing I'm going to want to do is slide over here and say new, and I'm going to assume this foreman is paid hourly. I'll hit the new button, and I'm going to put construction foreman. Now I'm only putting construction because I'm going to have some maintenance foremen coming up in a minute. It's a way for me to distinguish the two of them. If I start with construction, then all my construction employees will be grouped together, and then all my maintenance employees will be grouped together alphabetically. So let's say we have one foreman, and that foreman works about 1,800 regular hours per year and about 200 overtime hours per year. Their average wage would be $20 an hour. Now, if it isn't obvious, you're going to replace your regular hours, your overtime hours, and your wage with whatever it is that you pay your foreman. But once I've got this in here, you'll see it'll calculate my wages per year. Now, just remember that overtime is in addition to these hours, not part of these hours. So in this example, this foreman would have worked 2,000 hours, 1,800 regular and 200 overtime. Now, the last thing you want to look at is your bonus column. And if you're going to guaranteed give your employees a bonus, then you better budget for a bonus in here. However, if you've got some bonus that's based on performance or beating the budget, then you don't need to budget for a bonus. That bonus will only kick in if you beat this plan. Now, for the second construction foreman I have, I'll just do the exact same thing, but I'm going to click Save on the first one. Then I'll click New, and I'm going to hit Construction Foreman again. And now I'll fill out this person's hours. Let's say they work about the same hours, but this foreman makes $22 an hour. So now I've budgeted the correct wage for that foreman. I'll click Save to lock it in. Now let's look at how to budget for their laborers. Here's a good way to show you how to group employees together by role. So one option I have is to enter each laborer one at a time like I did with the foreman. But it's a lot faster if you do it this way. Hit New. Construction. Laborers. Now in the number of staff, I'm going to put in the number of laborers I have in the construction division. 5. I'm going to assume all these laborers work about the same number of hours and get paid about the same average wage. If they don't, then you should probably split it out so that you're more accurate. Let's say our laborers work about 1,650 hours a year with about 150 of overtime hours. And the average wage for our laborers is about $14.50 an hour. Now I've budgeted the wage for all those laborers. Instead of doing them one at a time, I've combined them all together in one row. It makes it a lot faster and simpler for building a budget, especially if you've got a lot of employees in your company. Now let's look at a maintenance foreman. I also want to include this because I did include maintenance in my sales. But let's pretend your maintenance foreman is on salary. So I'll go to the salary field staff, and I'll go New, and I'm going to type in maintenance foreman. Number is 1, if I only have one foreman on salary. Annual hours, let's say that foreman works 1,700. Now realize the hours don't exactly matter if the foreman's on salary, but nevertheless, don't skip or don't shortcut that step. The hours are important. They're going to affect overhead recovery, and they're also going to affect your company's capacity or how much sales you should be doing. So although it won't change the salary per se if I put 1 hour in there, it could really screw up some other numbers. So do your best to get this as accurate as possible, even though the employee is on salary. Over here, I'll type in their salary and a bonus if they had one, and now I've budgeted for the maintenance foreman as a salaried employee. I'm going to go back to hourly now and add those maintenance laborers in. So I'll save that last labor I did for construction, and I'll add the new one. Maintenance laborers. Let's say we've got 3 laborers, and they work about 1,500 hours a year each, and 100 hours of overtime, and they average about $12 an hour in the field. So I'll save those, and they're locked in. Now, essentially, I've pretty much built my budget in just a couple of minutes. I've got enough staff, I hope, to hit my sales goal. One way you can double check that is to look up here at the field labor ratio. The field labor ratio is a really interesting number, and in the next video, we'll actually show you some neat ways to use it. But what we're doing here is comparing what percent of our sales we're spending on the wages for field staff. And that, in my company here, works out to be 25.9%. And then we're going to contrast that to the industry average, 26.2%. Now, how does it know the industry average? This is where that information you put in the budget info is so critical. Reviewing back to my budget info, I said as a company we do 60% of our work from design, build, install, 30% from maintenance, and 10% from snow and ice. So this would be the percentage of revenue that comes from these different divisions. What it will do is then look at companies who do roughly that mix of revenue and give you some industry averages in terms of where those companies spend on labor. If you're lower than the industry average, that's a good thing. It means I spend less on wages for my sales than the industry does. If I'm higher than average, then there's a good chance you're going to struggle to be profitable. So it's a great double check here. Just remember this. We at LMN aren't telling you the industry average is exactly where you should be. There are a lot of variables here. You could do a lot of work with equipment or heavy equipment, and therefore you'd have lower labor but higher equipment. You could have very little equipment, and then your labor ratio might be too high or higher than the average, but with a lower equipment average, it may balance out. You might do a lot of work with subs, or you might do no work with subs, and these things are going to change your numbers from the industry average, of course. However, it's a good benchmark for a reasonable company that does a little bit of subcontracting every year. We'll talk more about the field labor ratio in the next video, and we'll show you some different and creative ways to use it. The last example I want to give before we move on to the next budget is an overhead staff person that sometimes works in the field. So remember again, if you have an overhead staff who works out in the field, but their time isn't counted when you estimate, then you don't need to pay any attention to what I'm about to say. If their time isn't counted when you build estimates, they are overhead. And it doesn't matter whether they're working in the office or working digging holes, they're still overhead because their hours aren't built into estimates. But there's a lot of cases where someone like an owner-operator, so an owner who still very much is hands-on in the field, or even an operations manager who once in a while gets behind some equipment and helps out on a job, some of their hours should be allocated to field labor if those hours are working off estimated hours on a job or would be counted as estimated hours. So here's how to enter somebody who is overhead but may have some of their time in the job. Let's pretend I've got an operations manager and we pay them a salary. So I'm going to go new and I'm going to say operations manager. Now the first thing you're going to want to do is figure out how many hours of their total hours belong here in the field labor budget. That is, how much of their time do you think actually gets estimated when you build estimates? Let's say I've got an operations manager who goes out in the field a fair bit, but maybe 25% of his time. So what I could do here is say 500 hours out of 2,000 hours. So that'll basically say what percentage of their wage and hours I'm putting here versus what I would put in overhead. So I've got one operations manager. The annual hours is going to be 500 hours. Now here's the important part. If it's a salary, I don't want to put the entire operations manager salary in here. I only want to put the same percentage of the salary that I've allocated in hours. So you can see by my hours, I've got 25% of the operations manager hours here. So I only want 25% of their salary. If the operations manager makes $50,000 a year, then the only salary I'm going to put in here is $12,500 because $12,500 is 25% of their $50,000 salary. Now I know I've got just a portion of the operations manager salary covered. The rest of this salary, so the remaining $37,500, will go in overhead when we get to that budget. But for now, we've got them set up. So we'll hit save. We'll lock it in. Now notice my field labor ratio has gone up. I'm now above the industry average. And here's where you might want to start tweaking. If you're well above the average, it might be telling you that you're too labor heavy or not productive enough or possibly not charging enough for labor. And then you could start to make adjustments. I prefer to leave the adjustments until the end of the budget when I'm done all my numbers, and then I can take a good look at all my numbers and see it all as a picture. Because it might be one of the examples we said earlier. You might be high or low on ratio, but it might be explained by subcontractors, equipment, or some other cost balancing. Once you've got your field labor budget here, I'm going to flip back to hourly just for a second. All these numbers are going to total up here. So I've got total hours, total wages, total burden. So it's going to automatically calculate payroll tax, workers' comp by taking 20% of your total wages and working that out to field labor burden. That's what makes it great as a percentage. If I change something, like I realize, my maintenance laborers are too many hours. Really, they only worked $1,350 last year. It's automatically going to adjust your burden and your wages just by making that one simple change. It's a heck of a lot easier than having to calculate fixed numbers for your payroll tax and all that over again. One more thing before we leave this budget so that you can see all the features. There is an action button over here, and there's two things that the action button can do. Number one, it can move staff to overhead. So if you entered somebody here and it was by mistake that they really should have been in overhead, all you need to do is click action, move to overhead, and it will pop that employee from this budget and into your overhead budget. The other option here is you can delete. So if I click delete, it's going to say, are you sure you want to remove that row? And you hit yes, and it's going to remove just that row that you hit delete on. So just that one section. If you need to change anything that you entered, by all means, just go in here and change it. You can increase the number, decrease the number, anything you want to do. Just make sure after you've done your changes, you hit save, and that'll lock it in there. As those progress bars are going like that, that means it's saving. When the progress bar is clear, you're ready to get to work again. That's pretty much it for the field labor budget. Once you've mastered that, you're ready to move on to the equipment budget. But before, we strongly recommend, you have a look at the Using the Field Labor Ratio video up next, just to see some creative uses for this number and how we use it to evaluate our productivity and set profitable goals for our foremen, as well as an incentive system for them. And remember, we're always here to help. If you had any questions with anything in this video, be sure to email us at support@golmn.com or use the live chat and reach out to us that way to ask your questions, and make sure you're comfortable with your numbers before moving forward with estimating.